All right, everyone, this is your expansion block. So expansion block. So it is a bullish expansion block over here and a bearish one over here. A down candle that produces a swing, a bullish price action that breaks a previous high is your expansion block. An up candle that produces a swing that breaks a previous low is a expansion block to the downside. So how do we read this? Well, this, as being the theme of the mentorship, is a balanced range inside of here. So once we start expanding, the key levels to look for are going to be the origin of this expansion, which starts with this lowest bullish candle and this highest bearish candle. This also creates a rejection block. The rejection block is this candle closing price here. When we wick a previous candle and we do not close below the low and the body, this area becomes sensitive on the candle, and we can expect price to have a reaction from there. Adversely, same thing up here. Once we close above here, the opening price of the down candle becomes a key level. That's your expansion block. I will always have the EQ of a balanced range as a key level. That will always be a reference point whenever you have a range that's balanced, because this down candle and this up candle between here and here and here and here, this is a balanced price range. So the EQ is always important. The next key level that we have to look for in an expansion is the second candle that closes consecutively in the same direction. This is your expansion confirmation. So bearish expansion confirmation here, 2 consecutive candles down. So when I'm looking for a trade, if we're not creating more structure like another down candle and then it's high being traded above, because if we do that, then we've created a balanced price range and I'm looking for trades off of there. If this is open, we will eventually come back down and mitigate these prices. So we have to come and pair orders. There's buy orders here, we have to come back with sell orders. Sell orders here, we have to come back with buy orders. When we are expanding, a lot of money is being put into these price moves. This is true fair value for buying. The institutions are always going to look for fair value to buy from, which is in the form of premium and discount. When this expansion happens, below the equilibrium of this expansion is a discounted price, and above it is a premium price. If we're going to buy, we want to come back down into a discounted portion of the range. Where are we going to buy from? Well, simply put, we're going to buy from where there was previous buying done, inside of a balanced price range and at our key levels, which is where institutions put money in to push price. That's why they're key levels. Adversely here, we're going to be looking for our key levels above 50%, because above 50% is fair value for selling, because that is a premium price. We want to sell at a premium price, and we want to buy at a discounted price. Where are we going to sell? Where there was previous selling done, and inside of a bearish expansion block. This is where orders are efficient. And this is where buying or selling was done. Another key point is we must break structure. in the form of a 3-candle swing high or swing low. If it fails to do that, then there's not enough money to shift the market or continue it in one direction. And then we look for the low to get taken. If we do come back down and close below these levels, we are now looking for them to act as resistance. So true support is where buying was done. If we're not buying these orders, then we are selling them. So we expect to come back up and sell from where we paired these orders. Same thing here. If we close back above, we expect orders to be paired here to the upside. Wicking is okay. When we're wicking, we are accumulating. But if we are closing, then we're creating order blocks in the other direction and switching order flow. Order flow comes from down candles highs being closed above and up candles lows being closed below because price is becoming balanced. This is how we follow order flow up and down. So the most prominent expansion block for this price action and relative to where we are in the market is right here. This up candle produced a swing that took previous lows, a lot of them. So we're going to be looking for the open, the origin, which is our expansion block or rejection block as well. Zoom in here. This wick did not close above this body or this candle. So this is a rejection block, origin, and then we have our confirmation. This is where most of the selling was done. We can always put the EQ on as well. These are areas that I'm looking to either buy from or sell from based off of the reactions that we have at them. But this hones in your view. Once we get here, as you can see, we sold from this level before with a lot of sells. Once we hit it on a lower time frame, the 5-minute, we got our sell confirmations to take a sell. Now, since we took this sold down and we failed to close below an up candle's low, which would have been this one, we are not confirmed bearish on this time or bearish on this time frame yet. We're running on buy side because we're closing above highs inside of this delivery, which started at this expansion. So to reiterate some previous lessons, we are balancing this range. This range needs up candles. Wicks fill, up candles balance. So I'm expecting if we are closing inside of this wick and we're not rejecting this high to get taken, and then we see what happens at the next key levels. If we close above this one here, then this is balanced, and then we can look to take this high. Okay, so that is expansion blocks and order flow. We'll see you on the next one.